Rajnish ji, welcome. Why are we beginning this session with regards to technology? Because technology is no longer a luxury for small businesses. Ladies and gentlemen, it's the ultimate game changer. From the digital payments to AI-driven platforms, tech is helping MSMEs break barriers and to explore how technology can truly empower India's emerging businesses. I'm being joined by someone who's seen as a leader on the center of India's digital transformation. Mr. Rajnish Kumar is the chairman of the Mastercard India. So welcome to NDTV.
Thank you very much.
Let's begin with the thought, which is particularly to do with Mastercard, because you represent Mastercard. Mastercard, sir, has been at the forefront of digital payments. My question is, how are digital innovations in particularly that infrastructure space like UPI, AI-driven credit assessments, changing the way small businesses operate and scale?
Yeah, your question is very wide-ranging. It covers everything in the question. As you said and rightly mentioned in your opening remark, the technology is all pervasive. It is for individuals, it is for large business, small business, medium business, nobody is untouched. And if anyone can think that they can survive without adoption of technology, it is going to be extremely difficult. Mastercard India, of course, Mastercard as an international payment system provider, and the other network also, Visa, for example. So they were in the forefront of payment technologies where they created a massive international network of merchant acceptance. And from India's perspective, UPI became a game changer and now a competitor to these networks. So India as a country and we as Indians are very proud of what India has achieved as far as adoption of technology is concerned in the payments and banking business both. And I joined the State Bank of India in 1980. It was all manual, everything. And the real work in digitization and adoption of technology started when Indian economy was opened up in 1991.
That's right.
Prior to that, technology existed. I won't say that it didn't exist, but it was more in the back office operations. And after 91, when private sector banks came in, and they came without any baggage and brought in new technology, after that, India has not looked back. And it is the entire ecosystem where banks, of course, are at the core because they provide the capital, they are capital providers. But if you look at today, any aspect of banking, but I will focus particularly for SME, whether it is their collection or whether it is loan underwriting. End-to-end loan underwriting today happens. And there are various stages of loans, pre-sanction, post-sanction, monitoring, collection, and if the account goes bad, then the other recovery mechanism. Today, everything is being done through technology. If the corporate is bigger, then loan underwriting cannot be through digital. But when it comes to MSME, again, for example, I chair the board of BharatPay, which is a fintech, which came into existence just in 2018. And millions of merchants where we put our QR code and all their collections comes through an escrow account. And based on that, we facilitate loans to these merchants digitally, end-to-end process. They don't have to go anywhere. It is all on the click of a button, seamless process. In 10-20 minutes, you can get a loan. So that is the power of technology and availability of credit today for the masses. Masses means, if we are talking in the context of MSME, the people which we always talked about that they don't have access to formal credit. It was very difficult when technology was not there to reach each and every corner of the country or to the smallest or smaller business. The technology enablement has helped the lenders, which are banks and non-banking finance companies, and supported by fintechs like BharatPe, to reach out those segments of the economy who otherwise would have been excluded and very difficult for lenders to reach out to them, underwrite their loan and give loan to them. So that is the power of technology, which is reshaping the whole ecosystem around which, and the manner in which businesses are conducted. Lending is only one aspect. But as I said, from lenders end to end, and from businesses also, whether it is their production, marketing, finance, accounts, management, everywhere you have to use technology.
And interestingly, it is the youth or the young population of India, which is right there in this audience, which is driving that technology. You know, Mr. Rajnish Kumar, most of the people here would be moving out of their homes without any cash, without any wallet. Okay, raise your hands. How many of you go outside your house with just a phone, without any cash, without your wallet?
I am also included in that.
Even I do that. Even my 10 rupee payment is done by my phone now. I scan and I pay.
Yes.
So that is the impact of technology, how closely it has touched our lives. You know, but the challenge certainly is that the MSMEs, how are they trying to adopt themselves to cost complexity, and also there are trust issues which are involved, How do you think then technology can make small businesses more affordable?
No, the whole idea around technology is to bring in the cost of operations down.
Yes.
As I said, that today, I'll give you an example again because I was chairman of State Bank of India, so I can't avoid that reference at all. So today, State Bank serves 50 crore customers.
Yes.
Imagine, how can you serve 50 crore customers if you don't have the technology? It is impossible. You can't do that. So same applies for MSMEs. So the younger people or the startup, there are two issues. One is, of course, when they come out, then need lot of holding around how the business is conducted. There the role of mentorship also can play a very critical role. So it is not only about technology, first is about understanding how the business operates. So that is one. Ideas, yes, definitely. The ideation happens at their level. Second is availability of capital. So capital is also available in different forms. Obviously, when it is a startup or a new company, the bank lending is not available, right? At that stage, it is the venture capital, and you would have some series A, B, C, D, E, F. So what it does represent that when you are just new, you have an idea, you have to find a venture capital is to fund that idea, believe in that idea, and that capital operates on the principle of high risk, high reward. Whereas bank capital, it works on the low risk, low reward. So venture capitalists will take risk. If the idea is acceptable, they will fund 10 startups, 8 may not succeed, but 1 or 2 succeeds and they get their return. That's how it works. So it is the capital, that is one. So lending capital would obviously be not available. At the early stage, it is all around venture capital, private equity. As the business matures, then the bank lending becomes available. The other way is, as I was giving example of a business like we have millions of businesses which are in retail trade. And every nook and corner of the country, whether it is urban, rural, semi-urban, you find people are in retail business. There, the technology has enabled what we call cash flow based lending. The example which I gave, that the people have put their QR or a swipe machine, and the lender has access to that cash. And typically the model works is that the cash flows into the account and the installment of the loan gets recovered from that cash flow, and rest of the money is available to the business. So the lack of capital or the very high cost of capital, which was through informal sectors, what typically we call margin system. So the technology has enabled the access to formal credit to these people who are called, what you call it, financially excluded. So their inclusion has happened on the credit side.
But sir, in all of these, one issue which is dominant or which is large in terms of trust. And particularly at a time when we know about the challenges with regards to fraud prevention and data security. You know, we constantly get that call that there's nothing called digital arrest. How is MasterCard helping create safer spaces,
So
particularly
Mastercard,
for MSMEs, and in general having that faith that it's okay to go ahead with these businesses?
yeah. So Mastercard, normally we associate a Mastercard with say payment, but the bigger power of Mastercard, the network lies in its capability to study the patterns, use the power of data analytics, where the fraud can be prevented, protected, the identity theft can be prevented. And many a times, if you use MasterCard, you will find that if you do a transaction in some of the overseas suspicious territories, I won't name any country, but you will immediately get an alert. So how does that alert come? Because there is a power of data analytics which is working behind this. So the power of data analytics, the access to the consumer behavior which we have at MasterCard or for that matter, any network. So that power enables us to help in fraud prevention, detection, take measures, and there is a very active, in fact, a separate business vertical in MasterCard who are not only doing this, but also it is a revenue center for us in Master.
And you know, when you were at the SBI had the honor of interviewing you several times as the chairman of the SBI. You have always been seen as this ideas man. So now, in your new role as the MasterCard chairman, I want to understand from you again, you know, particularly with regards to financial impact of MSMEs in the next 5 years, and merging that or marrying that with the AI and emerging technologies.
So it's not merger. AI is a tool.
Yes.
And there is HI, human intelligence, and there is artificial. So what is artificial intelligence doing? And there is a lot of course, no discussion can be complete unless you bring in AI. But the fact is that treat it as an agent. Instead of human, there is an agent based on whatever that agent has been taught and its own capability to learn. So AI can be used in any field for that, whether it is health, education, as I said, banking. So it is not merger. It is about that how do you combine the power of HI and AI. We are in an age where AI is a tool to augment the brain power. And that's why it is called fourth industrial revolution. So far, everything was around like your muscle power. Industrialization was around augmentation of humans' physical capability. AI is around.
You have used a very interesting phrase, and I want you to delve a little more on that. It's fourth industrial revolution. AI is that.
Yeah, that's what my understanding is, and that is all where, as I said, that so far it has been all around that your physical capabilities get out.
No, but then industrial revolution ensured more job opportunities. Will AI be taking away jobs or creating more jobs?
The shift will be there in the skills, and this argument is a very old argument, I tell. When we went for computerization of the banks in a massive way, and there was a huge debate, there was huge concern and resistance from the banking unions that the computerization will take away jobs from the bank. So that is a fact that some jobs might have come down, but the industry has to. So it got compensated. If you look at the size of the industry in mid-80s and the size of the industry today, there's a massive difference. And industry as a whole, The number of people have not gone down. But if you think that we were doing manually and then like State Bank employs now today 250,000 people, and in 1980 also it was employing almost an identical number of people. So today, if it was to do manual, number one, the industry or the bank would have not grown the size to which it has grown. Second is the IT sector jobs. There was a shift. So earlier it was only you join IAS, you join bank. But then the 90s, I think people don't think even IAS in certain geographies, not necessarily North India, as an option. They don't consider bank PO as an option. It is all around IT. So the job shift happened and the jobs went to IT sector and it flourished in India on the strength of BFSI is a big user of technology. So I believe same thing will happen. The productivity gain will be there as far as economy is concerned. And even if when I read the newspapers and many people who are in IT industry, they have commented on this and they have said that there is reskilling which will happen. So there is a fear, genuine fear, and how it will shape up, very difficult to predict. But I have always believed that an idea whose time has to come,
Yes.
you can't stop it.
Yes.
The jobs may go in different direction. And even in manufacturing industry, say, again I'm giving an example. Earlier, a job which 8 welders would do with a great risk to the person. Today robots are doing the job, right? So you can't prevent it. Now AI becomes the master or the servant. So the real danger is around that it should not become the master. It should remain a servant.
Absolutely. Who will dominate? Whether AI will dominate human intelligence or human intelligence will ensure complete dominance of AI, that will be the future. Certainly, my last question to you, and this is with regards to how India is almost being watched by the world as a country which has given direction to digital public infrastructure. You know, our UPI is watched. There's a lot of curiosity and also the global attention. How do you see platforms like ONDC transform level playing fields, or should I say expand their scope of businesses, particularly of the small and emerging businesses?
So it provides market access. What ONDC does, it is providing market access and bringing all platforms together. If you would have heard surely of GEM portal of Government of India. Now lakhs of crores of procurement of the government, it is happening on GEM. And it democratizes, it brings in transparency, capability of SMEs to provide to the government departments their products. Earlier it would have not been possible but for a portal like GEM. So the transparency, democratization, commoditization, that is all an outcome of the technology. And as I said, that it makes an enterprise more productive. And when the enterprises become productive, and if you see the aggregate effect, then the economy as a whole benefits nation. We as a nation benefit, we become a more productive. So even today, of course, it's a great thing to be amongst the largest economies. But fact of the matter is still is that when measured by productivity, we as a country are very low in the ladder. And because Indians have a natural flair for technology, that I can say. I've
National
seen.
fear
Yeah. Adoption is fast.
is a huge task
Everybody.
in general and across class, across societies.
Across society. So adoption is fast. So for improving the productivity, and if we continue and should continue and will continue, I am very confident about it, that we use technology extensively to improve the productivity of the Indian economy. And only then we will go up the ladder, will be able to improve our per capita income. We have achieved sort of a landmark in terms of the size of the economy, where now we are counted amongst world's largest economies. But the real benefit would be when in terms of per capita income, removal of poverty completely, when that happens, then we will be counted amongst the developed economies. And that is possible only when we have a very positive attitude toward technology. We should adopt technology. We should continue to innovate. And there is still many countries maybe ahead of us. So we should not deny that aspect. We should be proud of our achievement. Absolutely no doubt, it is good. But we should also be aware of the ground reality that much more work is happening around the globe. And we may be amongst the forefront, but we are not the leader in that sense.
I think that is the right note to end this discussion. Mr. Rajnish Kumar, pleasure having you on our platform. Thank you so much for this
Thank you.
illuminating
Thank you,
discussion.
Madam.
Thank you.